Good evening, everyone, and a warm welcome to all of you in ICICI Prudential Mutual Fund's ETF Simplified event. I, Nitin Kabadi, head ETF Business, would be conducting more such events to make it easy for the investors to understand ETFs. Next 15 to 20 minutes, we will be discussing more on basics of ETF. If you have any questions, we'll be happy to reply after the call. Thanks for tuning in. So what are ETFs? ETFs are passively managed mutual fund schemes which are listed and traded on exchange. Just like index funds, they track the underlying benchmark index. For example, Nifty 50 ETF tracks Nifty 50 index. Nifty Next 50 ETF tracks Nifty Next 50 index. And gold ETF tracks physical gold prices. Because it is listed and traded on exchange, ETF has all the features of index fund plus listed shares. So just like an index fund, ETF tracks an underlying index. They are open-ended mutual fund schemes. There is no exit load, has low expense ratio, has low tracking error, are highly transparent. An investor knows the underlying portfolio in which they are investing. When you compare it with stock, intraday trading is possible in ETFs. They trade at real-time price, which is close to real-time NAV. You can limit your order on exchange. You can invest as low as 1 unit. Take delivery in your demat account. There are different types of ETFs, equity category, debt category, and commodity category. In equity category, we have ETFs around large cap based, mid cap, multi cap, sector based ETFs. There are also smart beta ETFs. Smart beta is basically factor based or strategy based ETF. Further, there can be single factor or multiple factors ETFs also. We will have a separate session just to explain more on smart beta ETFs. In debt ETFs, there are liquid ETFs, bond and gilt ETFs are available. And on commodity side, gold ETF is available in the market. ETFs as compared to index funds are a bit different. So creation and redemption in case of ETFs can be done on exchange. So one can buy and sell ETF units on exchange, as well as with a minimum quantity size and multiple of that quantity size. They can also create and redeem units with AMC. In case of index fund, compulsory the units has to be created and redeemed with AMC. In ETFs, you get real-time NAV, whereas in case of index fund, they can be bought and sold at closing NAV. So redemption and creation happens at a closing NAV. ETFs are generally low expense ratio products as compared to index funds. And there is no minimum amount as such. You can, as good as you can buy, as low as 1 unit also you can invest in ETFs, whereas in index fund there is a minimum amount which is prescribed. Intraday trading is possible in ETFs, whereas trading in index fund is not possible. In ETFs, you require compulsory a demat account is required, whereas in index fund it is not mandated to have a demat account. Talking about the global growth, globally we have seen a lot of money is flowing into ETFs. ETFs have grown exponentially from $1,000 billion in 2010 to $7,400 billion in September 20. So a CAGR of 22%. In India, currently the AUM is around 2 lakh crores. In last few years, we have seen a push from government and regulators for ETFs, where disinvestment was done through ETF route. PSU companies have raised debt fund through debt ETFs. EPFOs and retirement funds are allowed to invest in ETFs. Budget announcement that ATC benefit will be extended to ETF. Of course, we are awaiting for the CBDT notification. For non-demat account holders, they can participate in low-cost ETFs through fund of fund. And fund of fund schemes which invest in equity ETFs will have equity taxation. All other ETF, equity fund of fund schemes have debt taxation. So a lot of regulatory support has been offered to ETFs. So coming to the benefits of this ETF, investors can participate in market with a low cost or cost efficient manner through this ETF. They can invest as low as 1 unit, which could be less than 100 rupees or less than 50 rupees also. There's an opportunity to invest at a real-time NAV. There's a transparency in holding, so you know exactly what is the portfolio. And also in price, there is a transparency. So you can check the real-time NAV on the website of the AMC. They also provide diversification benefits, and all these indices are back-tested and research-based. So no stock-specific research is required for the investors. 3 important criteria for investors while selecting ETFs. One is expense ratio, second is tracking error, and third is liquidity. Lower the expense ratio, better it is for investors. Lower the tracking error, scheme return will be close to index return. And third, liquidity on exchange. So entry and exit for the scheme from the scheme would be smooth for the investors. So how do we invest in ETFs? Investors need to have a trading account and a demat account to invest in ETFs. Just log into your trading account and like shares, invest in ETFs or place an order with your dealer. Investors can invest through SIP mode or in a lump sum manner. So most of the broking firms provide stock SIP platform through which investors can register SIP in ETFs. Simultaneously, in case of large quantity and a multiple of those quantities, investors can approach AMC for creation and redemption of units also. One more question we come across is how much to invest. If investors have already invested in mutual fund or passive index fund, there is no need to redeem from those mutual fund. However, we recommend a part of asset allocation. As a part of asset allocation, certain portion that could be in the range of 25 to 30% of the total investment should be in ETFs. What is the tax treatment? In case of equity ETFs, just like stocks or mutual fund, short-term capital gain, that is holding less than a year, will be taxed at 15%. In case of long-term capital gain holding more than 1 year, is taxed at 10%. In case of debt ETFs, short-term capital gain, that is which is held for less than 3 years, will be taxed at slab rate. Long-term capital gain held for more than 3 years is taxed at 20% with indexation benefits. So just to summarize our discussion, investors looking for low-cost investment option in diversified portfolio and looking for maintaining liquidity as a part of asset allocation should evaluate ETFs or should consult their financial advisor. So if there are any questions, we are happy to take the questions. So that's about it. If you have any questions, you can post it on the link on our social media account. We'll be happy to reply back to you. So that is we have discussed today. Thank you to all of you. It is always a great pleasure to connect with you. Hope you found the information useful. Requesting audience to stay tuned for more such live sessions where we will simplify ETFs. Thank you for listening. Stay safe. Take care of yourself. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.